Hi everyone. Today I am going to teach you an intraday trading strategy that is very simple and you can make a lot of profit with it. If you are interested in day trading like me and want to profit from the market every day and enjoy trading, stay with me until the end of this video. For intraday trading, we can choose the time frame from 1 to 15 minutes. I chose the 15-minute time frame for this strategy. Now let's go to adding indicators. We need two moving averages to tell us the direction of the trend. Because in this strategy we only trade in the direction of the trend. I set the number of one of these moving averages to 20 and change its color to white. I will set the other moving average number to 50 and change its color to red. Whenever the 20 moving average is below the 50 moving average, we expect a downtrend and only look for sell positions. And whenever the 20 moving average is above the 50 moving average, we expect an uptrend and only look for buy positions. But how do we find the exact entry point? We should add one of the most popular indicators for intraday trading, Stochastic, to the chart. After adding this indicator, we change the input numbers like this. We go to the Style tab. We don't need the background color and the middle line, so uncheck. We set the upper band to 75 and the lower band to 25. Now everything is ready. Let's start trading. Stochastic consists of three parts. The first part, two blue and orange lines, which we call stochastic lines. The second part is the upper line, which we call the upper band, and when the stochastic lines go above the upper band, we say that overbought has happened and we can expect the price to drop. The last part is the lower line, which we call the lower band, and when the stochastic lines go below the lower band, we say that oversold has happened and we can expect the price to go up. Now, how should we trade? In the first step, we need to find the direction of the trend by moving averages. For example, as you can see, we have an uptrend here, because the 20 moving average is above the 50 moving average. Now, wherever in the stochastic, oversold happened and after that, the stochastic blue line crosses the orange line upwards, we enter the buying position. Here you can see that the conditions are met and we open a buy position. We place the stop loss below the previous swing and the take profit equal to the stop loss. To enter a sell position, the 20 moving average must be below the 50 moving average. Now, wherever in the stochastic, overbought happened and after that, the stochastic blue line crosses the orange line downwards, we enter to sell position. We set the stop loss above the previous swing and the take profit equal to the stop loss. There are some important points about this strategy that I will tell you at the end of the video, but before that, I invite you to an exciting part. Let's do some live trades together to learn the strategy better. Let's go. But now it's time to tell you important points that if you don't follow, you will lose your money. The first point, always trade in the direction of the trend. This is the most important point. The second point, if you want to be more careful in a buy position, the 20 moving average should be above the 50 moving average, and the price should also be above the 50 moving average, and for a sell position, the 20 moving average should be below the 50 moving average, and the price should also be below the 50 moving average. The third point is that you can set the take profit 1.5 times the stop loss, but be sure to backtest the symbol you want to trade before doing this. And the last point, if you want an indicator to tell you exactly where to buy and sell and get free signals, watch this video that appears on the screen. I am waiting for you next week with a new strategy. Don't forget to subscribe.